Hey there, in today's video I'm going to discuss 9 facts that every tax-free savings account holder in Canada should know. First of all though, what is a tax-free savings account, or TFSA for short? Well, it's a registered account in Canada that allows Canadian residents to save and invest money completely tax-free. Since deposits into a TFSA are made with after-tax dollars, that means that when you withdraw that money later on, you don't have to pay any tax on it, including if you've invested the money and you've made capital gains or interest or dividend income. So really it's a great tool for Canadians and Canadian residents to save and build up long-term wealth. Okay, with that out of the way, here is the list of 9 facts that every TFSA holder should be aware of. And some of the things on this list are not really that well known. The first one is simple, and that is in order to open a TFSA account, you have to be at least 18 years old and have a valid social insurance number. Secondly, there are a lot of things that you can do within a TFSA. You can just put cash in it and use it as a generic savings account, but you can also make investments through a TFSA in things like stocks, bonds, GICs, mutual funds, etc. This flexibility gives you a lot of choices of how to grow your portfolio over time and to enjoy the benefit of having tax-free capital gains as well as interest and dividend income on any investments that you make. Number 3, there is an annual contribution limit for TFSAs. So you can't just put unlimited money into the account and then enjoy tax-free gains on all of your investments. There is a limit, but it's cumulative. It goes up every single year. And if you don't use the full amount in one year, you can still deposit that amount at any time in the future. To illustrate the point, here's a chart from Wealthsimple that shows all of the annual contribution limits going back to 2009, which was the first year that the TFSA was introduced. And in 2009, you could put $5,000 into the account as long as you were 18 years of age. And in every subsequent year, the amount has gone up by the number that you see on the chart here. So for instance, in 2015, there was a one-time increase in the contribution limit of $10,000. So assuming that you were at least 18 years old in 2009, then your contribution limit in 2021 would currently be $75,500. And if you're younger than that, then you can see what your limit would be by just adding up the annual contribution limit from all of the years since you were eligible. For example, if you just turned 18 in 2021, then your contribution limit would currently just be $6,000, but it will go up from here over time. A final point here is that if you contribute more than what's allowed under your contribution limit, the CRA, or Canada Revenue Agency, is actually going to charge you a 1% fee per month on the amount that you're over the contribution limit. So make sure you don't do that. The fourth fact about TFSAs is that you can actually take money out of the account at any time. And if you do, you don't lose the contribution room, but you just can't put it back that year. You have to wait for the next calendar year, and then your contribution limit will be increased or rolled over, and you can put the amount that you withdrew back into the account at that time. Number 5, you can have multiple TFSAs with different banks or brokerages, as long as your total contributions to all of the TFSAs that you have doesn't exceed the contribution limit. And in my personal case, I actually have 3. I have one with Wealthsimple Trade, I have one with TD Direct Invest, and I have one with Quest Trade. Number 6, you can't day trade in a TFSA. And if you do, the CRA might come knocking on your door and asking for a cut of any capital gains that you earn. The CRA actually audits people's TFSAs to make sure that they're not day trading, and they recover millions of dollars in unpaid taxes every year as a result. So you really need to make sure that you're not day trading. The tough part is that the CRA doesn't tell us exactly what is considered to be day trading. Obviously, if you buy and sell the same stock on a daily basis, that's day trading. But beyond that, there is a lot of gray area where it's really a matter of interpretation and opinion. Now, I've actually posted another video delving into the issue more deeply, and I'm going to throw a link to that up here in case you want to learn more about day trading in TFSAs or RRSPs and the difference between those two accounts. Number 7, there are actually some benefits to only investing in Canadian securities or investments within a tax-free savings account. And that is because certain types of foreign investments or dividends from foreign investments are taxable. So let's say you invested in a US stock that pays dividends like Microsoft. When you receive the dividend income, a portion of it is going to be subject to something called a foreign withholding tax. So it's something to keep in mind. The same thing is not true with Canadian dividends. That income is tax-free. It's also important to note though that there are no capital gains on selling US stocks from within a Canadian tax-free savings account. So if you're investing in US stocks that don't actually pay dividends, or if you're not worried about dealing with the tax complications of paying a foreign withholding tax on US dividend stocks, then go for it. The eighth fact is that not all investments are actually eligible to be held within a tax-free savings account. For example, penny stocks that trade on over-the-counter markets are not considered qualified investments and can't be held in a TFSA. And if the Canada Revenue Agency actually audits your accounts and finds you holding non-qualified investments in a TFSA, you could be subject to fees or penalties. The ninth and final fact about TFSAs is that there are actually a number of ways that you could be taxed or penalized for making investments in a TFSA in the wrong manner. I've already mentioned some of these things, but the full list includes day trading, over-contributing, investing in non-qualified investments, making contributions to a TFSA if you're a non-Canadian resident, and something slightly more complicated called tax payable on advantage. And there's a number of things that fall under this category, such as investing in situations where it's not an arm's length deal. I'm going to throw a link in the description box that contains a more legalistic and detailed description of what this last item means. And that is it. Those are 9 facts that every TFSA holder in Canada should be aware of. If you think I missed anything, please let me know down in the comments section. And if you want to see more content about investing in personal finance as well as entrepreneurship, please don't forget to subscribe to the channel, and I will see you next time.